Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it way back in 2003, over 20 years ago, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems with about 91% winning trades, and of course, more recently, our KISS systems, which you should check out. You can still do so. We also added a new weekly component so that you can actually, those of you who want less signals, want them to hold longer periods of times, but still have protection for bear markets, you can do so. For example, NVIDIA here on the weekly would have went long back in 2022. It's up 474%. I'll go over that in a minute. But again, I hope everyone's enjoying the week. It is Tuesday, February 27th. And this is the technical analysis review of the markets, our trading systems. And let me go ahead and get this back-end recording started. This is for our standard web page format. We got a separate audio for that, so I'm going to start that now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, February 27th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. Same general theme as I always keep. We have our open discussion. We look at the major indexes from a top-down fashion. We look at some indicators, various sectors, US dollar, commodities, precious metals, and of course, our trade ideas. By the way, I added some new trade ideas tonight. AZUL, BW, AAP, Advanced Auto Parts, WRBY, STRO. EZ also, it's been on the list, not a new one, but that's looking actually pretty decent, kind of like a bull flag. We've had some nice setups here. KISS systems have been knocking it out of the park lately, which I'll talk about again. But again, as far as the market, as you know, it was weak coming into this week. Market was down on Monday, sold off from Friday's late day sell-off. But if you listen to my weekend newsletter, here's my written comments from the weekend. I said, we're still favoring this pullback to be bought with another move to new highs, as I cannot count 5 waves up yet on an intraday time frame on the S&P 500 and the Qs. And again, I'll show that on the charts below. Steve discussed it in Monday's newsletter. That's not on YouTube. Remember, Steve doesn't do YouTube. But again, pretty much the same thing has been playing out here. I couldn't count a completed wave cycle on the upside, so that's why I've been favoring more upside. All right. And anyway, let's go ahead and get started here. So first off, again, on the weekend, I did 2 videos. I did one on the general market technical analysis on that, and I did an 11-minute video on our KISS system showing you some new recent major updates we've done. So again, if you haven't done so, go there. We've added a weekly portion where we have most of the daily systems all as weekly as well. We don't have every single daily there because you need enough time, you need enough data points for the system to work. Okay, you need enough bars back, and some of the charts on a weekly time frame don't have enough if there are new issues over the last year or 2. But anyway, I think there's, on the daily right now, we have over 750 stocks that we're tracking on the systems, and I think we have over 650 on the weekly. There's that extensive FAQ. You see premium here. We're going to be soon adding some of these high performance systems. But again, if you haven't done so, go here and check it out. Really cool stuff. Some other things we're adding besides that premium, we're going to be making some update changes to the emails that go out. So we're going to be adding favorites for your weekly. And also, trying to remember what I was going to say now. I lost my train of thought. I remember now. One thing some subscribers asked about is, hey, we can set favorites, and make sure you do that, right? Remember, we've got our favorites tab here. But, not all my favorites I own. Maybe I'm tracking 30 stocks as favorites, but I own 7 of them, right? Can you make a separate favorites for the ones I actually own so I can get a separate email on those? So I think that's actually a good idea. We're going to try to add that. But, let me show you an example of one of the weeklies here. So let's look at item number 2. So here's image number 2. Again, this is right from the website. Oh, here's another change we added from the weekend. So we're also showing the percent, or whenever these systems have an open trade, we're showing that open trade stats right above the chart. So when you click on the live dynamic chart, you'll see it. So here's NVIDIA on the weekly. Again, this is an idealized example, but the KISS on the weekly would have went long way back here on October 28th, 2022. So a year and a half ago, right? That trade is up 474%. It would have raised its smart trailing stop 28 times, okay? So you can see the entry back here at the vertical line, and you can see the trade is still open. In fact, during the fall time frame, whenever the market had that correction, notice it didn't exit. It just had the stop wide enough not to exit. The daily would have exited. That gives you an idea of the weekly KISS systems. Again, you know, there's give and take on everything, right? The weekly, you're maybe going to get in later sometimes, or maybe you get out a little bit lower than you would on a daily, but you're able to stick in trends longer. You know, for example, this trades a year and a half. So this may be, these weeklies may be ideal for those who, they don't trade the markets much, they're retired, but they still want some sort of protection for their stock portfolio, their 401k. They don't want to go through bear markets or strong corrections. And the weeklies will still provide that protection, okay? But great trade on this NVIDIA. There's a lot of things in these charts that said besides the KISS system, you know, we have the DeMark. You can see we had a DeMark 9 here on NVIDIA the previous week. We're pulling back from it, you know. Moving average ribbon, various stuff on here. So cool stuff. Check it out if you haven't done so. Let's move back to the general market newsletter. So here's the index sector table, what transpired today and this week. You can see today, most of the indexes were up except for the Dow, down 0.25%. The Russell's really been outperforming here lately, playing some catch up of 1.4%. It rallied basically in the top of that coil. Now we'll see if it can break out. Wouldn't be surprised if it breaks out of the daily coil. For the week, the Russell's up 2%. The Nasdaq's up while the Dow and S&P are slightly down. As far as the 21 market sectors we follow, most of them were up today. The ones that were down were all down less than 0.5%. Okay. Utilities had a pretty decent day, up 1.2%. Retail up 2.5%. U.S. dollar, you know, up just a tad, down slightly for the week. Cryptocurrencies came roaring back. The stocks have been on fire. By the way, take a look at some of the crypto stocks and the crypto ETFs in the KISS system. Mara, MSTR, Hive, Bido, you name it, they've been killing it. Commodities here, mostly to the upside here, except for coffee. Everything else was up today. Crude oil, natural gas, copper, all this stuff. And most of them are up for the week as well, except for copper. And of course, coffee. Precious metals, well, again, nothing's changed there, guys. You know, on the weekend, I put a couple setups to monitor, but again, that area still isn't ready to go. You know, right now, again, everything's in Bitcoin. That's what's going. You know, Bitcoin is in a heck of an uptrend. Wouldn't be surprised to see Bitcoin hit at least 100,000. But right now, the precious metals, you know, they're not doing anything. Okay. The stocks continue to underperform, and while they underperform, I prefer not to own that area. So that's fine. If they do have another good leg down, I think that next leg could be a good washout finally, but we'll see. And, you know, the market was up today despite the 10-year, 30-year up slightly, the rates. Next. Item number 5 shows the economic news calendar. Again, we had a lot of news on the docket this week. Tomorrow, Thursday, we have the initial jobless claims, PCE, prices, PMI, home sales, natural gas inventories. All right, let's go and jump to the index charts. First chart below, item number 6 is the daily snapshot of the 5 key major indexes, just with simple Bollinger Bands. I like to keep these simple. Again, you can see back in late October, price was washed out below the lower Bollinger Bands. That ended up being a major low, obviously. We've just been in this momentum uptrend since. You know, little pullback from last Friday. You can see we had those dojis up at the upper Bollinger Band, so pulled back a little bit. But again, nothing's changed in the trend, guys. Absolutely nothing. Next, chart number 7, here's the Dow. Again, nothing's changed in this pattern. It just continues up, up, and away. All the moving averages, even the short-term moving averages, have a strong 45-degree slope. Whenever you have that, do not attempt to be taking swing shorts. Okay, doesn't mean you can't do a hedge, against some longs that you have, stuff like that. But when the market's in this position, you don't crash from here. Okay, you need to break uptrend symmetry, and then you look for a lower high to short. All right, but again, obviously we're getting up here. We're looking for an eventual correction, but we're going to ride this trend for as long as it lasts. Okay. Another thing to watch on the Dow here is the RSI trend line. Breaking that would be a key point as well. Moving on to the S&P charts. First off, here's the weekly chart. So the S&P is down 0.2% for the week, still struggling around this upper trend line, expanding coil-like pattern. Next. Chart number 9, here's the daily chart showing this long, tight wedge. Again, we've maintained that wedge. Last week, we bounced right off that 20-day moving average. And here's the thing, guys. The market is uptrending until it breaks symmetry. The largest pullback in the uptrend since the October lows is about 130 points. I'm a very analytical person. I used to be a chemist. If you don't know that, go to our website, breakpointtrades.com. There's a bio you can read about. I used to do research. I used to be in whatever. So I did all that, and I'm analytical. That's how I approach technical analysis in these systems. But the point I'm making here, long-winded, is I like things where I can make really clear decisions from. So I know that the largest pullback in the uptrend is about 130 points. So I know that the S&P needs to have a pullback larger than 130 points to break this initial uptrend symmetry. Then I'll definitely be much, much more conservative on things and then even look to short the next bounce. But for now, we're still in this wedge. It's obviously getting pretty tight. Trend lines are starting to converge now a little bit, but we're still trending up in it. We have the divergence building, but nothing's changed. Another one you may not be aware of, here's the 60 stochastic. We like that for a trending reason. You can see how on trending times, it'll just embed itself above 80%. When it falls below 80, then obviously you want to pay attention. To me, for trending markets, it's more useful, the 60 link stochastics versus a fast stochastic like this. It's up and down. Next. Chart number 10, here's the KISS system for the S&P. Again, no changes. Stop is pretty tight there at 49.51, quite honestly. System went long back there on October 31st, raised its stop a good half dozen times. No matter what happens in the market, if the market were to go down here and hit that most recent stop, it's a wildly profitable trade. If the market continues marching up, we'll see likely a new smart trailing stop. That's what I like the systems for, guys. And that's why I think they could be useful for you, is because, they'll keep you in the trend. I mean, there's people been saying the market's overbought for the last 2-3 months, a couple months anyway. So maybe they sold out. With the systems, they could have just stayed in the trend. Next. Chart number 11, here's the 4 time frames. Again, the daily, remember we bounced off that ATR last week. That ATR is always a really good guide. That's the 14.3 ATR. And 14.3, that's the 14 length, and 3 is the standard deviation. This ATR that I use is weighted, which means it's kind of like a weighted, like an exponential moving average. There's more weight put on the recent data instead of all 14 bars being used equally. But anyway, we bounced off the ATR last week. We pulled back off those resistance cycles I showed on the weekend from the 130-minute, 78-minute. But remember, I've been looking for a bounce to yet another high. You can see we had a DeMark 9 on the 78-minute, and then today a support cycle to potentially support another leg up from here. Chart number 12, here's the half-day chart, just showing this channel. Again, until we break this channel, no changes. Chart number 13, here's the 60-minute chart. So here's that count I was talking about, guys, on the weekend. I said I could only count, I said on the weekend at Friday's highs, I couldn't count 5 waves up. So here's one potential count, 1, 2, 3, 4, and then we still get another move up and a 5. Now, once we get that next move up, I think then we got to be cautious again. So we'll see. Chart number 14, here's a 15-minute chart. Steve showed this last night. You can see we broke this little channel. One thing he's showing here is a possible ending diagonal. So where we get a move up, new high, kind of like this would be basically a 3, 4, 5. Okay. So we'll see if that scenario plays out. Next, moving on to the Qs. Chart 15 here is the Qs weekly, up 0.2%. This has that wave count that I've had in place since the early fall, and this has honestly played out because this wave count counted for that correction in the wave in the fall time frame is a simple 3-wave ABC wave 4. The smaller degree wave count is in parentheses, so we're working still on this wave 5 of 3. Once this is complete, it's not complete yet, then I'm looking for that deeper wave 4. Okay, so nothing's changed, guys. Nothing has changed in this chart for months. Okay, but once this initial 5 of 3 is complete, I'm looking for a deeper 4th wave pullback. It won't end the bull market because then I'm looking for yet another move up to new highs in a wave 5. Chart 16, here's daily view of the S&P or the Qs. So again, remember on the S&P, I said needs a pullback larger than about 130 points to break the uptrend. Well, the Qs need a pullback larger than about 18 points to break the uptrend symmetry. Largest pullback's been about 17.5 points. Chart 17, here's another view, just a zoomed in view. And chart 18, another view zoomed out, quite honestly. And chart 19, half-day chart. Honestly, I could have taken a couple of these out. A lot of duplicate stuff here. And chart 20, here's the 60-minute chart. So again, we had that perfect ABC pullback the previous week, and then we rallied up. So to me, it looks like it's flagging here, that it needs another move up. Chart 21, here's the Qs on the KISS system. Again, no changes. Smart trailing stop, still 421.11, 421.21. See the arrows here I have on there? So here's one useful guide on these moving average ribbons. So on the moving average ribbons, I use a 9, 20, 34, and 50 EMA. So they're EMAs, 9, 20, 34, and 50. The BPTMA here is an exotic moving average. It's kind of like a whole type moving average. It's a bit faster than a whole moving average. I can't remember the length I use for that. I'm using like a 15 or something, but it colors by the slope. But here's what I'm getting at. It's pretty useful because whenever that is trending over the moving average ribbon, so when the moving average ribbon's in a bullish configuration, bullish stacking, when it turns red, pinches into it, these are all buying opportunities. Buy opportunity, buy opportunity, buy opportunity. So that's how it's useful, okay? Next. Chart 22, here's the 4 time frames. Again, very similar look to the S&P. We had this resistance cycles I showed on the weekend, 130 minute, 78 minute, which we pulled back from, more of a sideways pullback. We got a support cycle here on the 78 minute, just like on the S&P. Next, chart 23, here's the IWM Russell 2000, up 1.4%. It's up 2% this week. Remember, it's been in this coil pattern, so it's right at the top of the coil pattern. Now we'll see if it can bust out of here. To me, again, this looks like a perfect 3, wave 3, 4th wave consolidation. A new move up would be a wave 5. And we pointed out that inverse head and shoulder pattern back here in November. Played out, obviously. Next, chart 24, again, just keep an eye on these hedges. You know, my thought is the market makes another high. No reason to be loaded in to have much of these or any of these yet, but definitely you want to start keeping track of these. SQQQ, that's the triple inverse ETF for the Qs, still in the same channel. And chart 25, SPXU, still in the same downtrend channel. So no change with these. And then again, if you have a lot of longs, tons of longs that you don't want to sell and maybe you want a little protection, you could always employ these as hedges. But again, right now, like I said, I don't see any short in the market. So there you go on the indexes, guys. Let's go ahead and move on. Chart 26, here's the VIX. Continues going down. Remember, when this VIX Bollinger Band system, when it closes outside its upper Bollinger Band and closes back inside, that's a buy signal. You get a sell signal when it's closes below the lower Bollinger Bands and back inside. We haven't had many sell signals, obviously, for a while. But you've had 5 buy signals here since December. All have played out beautifully. Next. As far as indicators showing some divergences, the NYAD advanced decline, this is the 10-day average, and this is the S&P. You do have a pretty good divergence here setting up. Notice this. Lower high in the NYAD average, S&P higher high. So definitely divergence here, guys. You could see in the past when you had these divergences. So this is something that could play out, I think, when we do get our next push up. Just pointing that out. Let's move on to look at some of the market sectors. Driver 28, here's biotech with small caps rallying. There's a lot of biotech and small caps, so this area has been on fire. Look at this move this week in biotech. Huge move. Driver 29, here's the transports, essentially a flat day. Remember, showed it as a cup and handle pattern back in January, which has been playing out. Driver 30, here's XOK Technology. Still nothing new. Hasn't made a new high here. We'll see if we get another high or not. Moves with the Qs, basically. It's pretty weighted, though, just to 2 stocks. Driver 31, XLC Communication Sector. It's on a little coil here. This could go either way, guys. This could be a quick short if it breaks the coil. These are your demand zones below, or this could break up for another pop higher, for a long, for a little 5th wave move. Driver 32, here's the banks. Still in this pattern for the last month or so. No changes yet. Driver 33, industrials. This sector has been absolutely on fire. No changes at all. Just continues strongly up. Driver 34, retail had a big day. I think it was the biggest gain today for the sectors, up 2.5%. Nice move from that little consolidation pattern. Driver 35, utilities. It's been in this channel. Nice move up today. Again, it's still in the channel though. Driver 36, here's material sector. This is the weekly chart. What you have here is a potential large weekly ascending triangle pattern. Driver 37, energy. So far, energy XLE has been struggling right around this symmetry. Remember, the largest bounce in this downtrend from the September highs was about $8.20. That's marked via the purple dotted line. So if you add it from to the recent low, comes in around 87. Notice how that's where price has been stalling so far. So again, kind of like on the market where you need a pullback, say on the S&P larger than 130 points to break uptrend symmetry. Well, on the XLE, you need a pullback, or you need a rally larger than this to break the symmetry. Haven't done that yet. Obviously, we broke over the downtrend line though. Driver 38, OIH, oil services. Again, it's poked out of its little channel here, hasn't broken symmetry. Looking at a few individual names, here's Oxy. Remember, this is Warren Buffett's big holding. Broke out of that downtrend line over a week ago. Right now, it's coiling into a tight little bull pennant. Driver 40, here's ExxonMobil. Again, we had it as a long back here in January off those dojis. Excellent entry there. Chopping around in here. I suggested to stop at that 99.5 area, higher low, but quite honestly, I think you can move it up. You got a higher low here. You also have a higher low up around this 20-day moving average. And Driver 41, this is that monthly chart of XOP, S&P oil and gas exploration. You have just an absolute beautiful coil setting up over the last 2 years. Something to monitor longer term. Driver 42, FXI, that's the Chinese ETF. So far up 0.8% for the week. I've been showing this for the last several weeks. As I stated, the Chinese market's quite oversold on a multi-year basis, unlike our markets, which are at new all-time highs. Driver 43, here's FXI in the daily. Again, nice move out of the channel. It's been a nice trade here if you bought this several weeks ago. Remember, several weeks ago, I talked about the good volume patterns here. And nice move so far. The other areas that have been on fire is the Nikkei, Japan, new all-time highs. Remember, they They started their secular bear market in 1989 after topping out. They finally took out that channel back in 2013, 14. Moving to the bond market, here's high yield corporate, still in this big old coil pattern. It's been over 2 months now. Energy is building. Look at the 50, 20 MA starting to come together a bit. Chart 46, here's the high yield corporate with S&P. Remember, it hasn't participated with the S&P. Chart 47, TLT, still in the same old downtrend channel. Chart 48, 10-year treasury yield, still working on this potential wave C. Moving to commodities, chart 49, DBC, rebounded off that trend line again and demand zone. Volume pickup there. Now we'll see if it can start to move higher. Chart 50, natural gas, weekly chart up 6.4% for the week. Again, it sold off strongly from this pattern, but found support this big area around the $1.50 area. That area goes back 28 years, guys. Big area. So it was logical to expect a rally from there. So here's the monthly chart again. Go back to 1995. You could see how this zone around the $1.50 area has been essentially the bottom over the last 28 years. So logical to expect a bounce from there. Chart 52, here's the daily. Okay, now see if we can clear this 20-day moving average. And finally, chart 53, here's UNG. That's one of the ETFs. Had that gap last week, but found support at that trend line I said to watch. Now we'll see if it can start an uptrend here. Chart 54, crude oil, up in the pattern. You got resistance approaching up here. We'll see how it handles that.
1 week performance that we saw as far.
Chart 55, copper, just chopping around here, quite honestly. It's back to its 9 and 50 EMA there. Chart 56, DBA agriculture. This has been a nice trade, especially since from that breakout in January. Little doji spinning top today, so a little warning. You have some divergence showing up, but otherwise it's in an uptrend. And here's the weekly chart, the cup and handle. Again, this has been a trade that I've showed since early in the year. It's been a nice swing trade over the last month and a half. Chart 58, uranium. Remember, this broke its 50-day moving average the previous week, but it is bouncing off this demand zone for now. Moving to the crypto market, just been screaming higher. Here's crypto, just up, up, and away. Quite honestly, that 100,000, wouldn't be surprised if that's eventually tested. Chart 60, here's Bido. That's one of the Bitcoin ETFs. The system, this is the KISS system, went long. You can see it had a long back here in October to, looks like December, maybe it was early January, had a nice winning trade there. Then it went long a couple weeks later, right there on, what was the date? February 7th, right here. So even that February 7th, this trade is up 26%. Awesome. Again, this is live. It's not back tested. This has been right on the website. Looking at the other cryptos, here's Ethereum. Boy, this has had a hell of a move from that trend line break. We showed this about a month ago. Chart 62, MSTR. Boy, what a move. I had it as a long back here off this little resistance break. Man, what a move. And the KISS system has caught this as well. Here's Mara, same deal. Heck of a move. Nice rally off that demand zone too recently. And the final one, chart 64, Hive. Here, Steve added a potential wave count. That last pullback, a wave 4. So another move up in a wave 5. Very nice moves in this group. Next, chart 65, US dollar. Again, nothing really changing, guys. It's just chopping around here for the last couple weeks. Chart 66, gold. Again, guys, gold is still holding in the 2000s, but look at the stocks. The miners cannot rally. Look at how they're just underperformed for over 2 months here. That has to change. Otherwise, gold is still in this kind of coil-like pattern. But again, I don't want to be long unless it just breaks the trend line of the coil, the ratio. I'd also like to see the RSI break that trend line as well. Driver 67, here's silver, down about 1% for the week, still in the same old pattern it's been in for the last year and a half. Driver 68, GDX, the miners, same deal, guys. Again, in a steep downtrend channel, it needs to break the downtrend line. Hasn't been able to do so. Need to break the ratio trend line, the RSI trend line. Nothing's changed. Driver 69, here's the 2-hour view. Shows you that channel in a little better fashion and the ratio. Driver 70, here's the BPGDM. Again, it is an oversold territory. This can obviously get much more oversold, but it is an area to start monitoring it. It's had excellent sell signals. That sell signal in December, the buy signal in September, the sell signal in May of last year. Those have all been excellent. One of the stocks I highlighted on the weekend was AU, Anglo Gold, and it really is holding up well here. It pulled back today, 1%, but nice volume patterns, nice coil. But again, it's going to struggle here until GDX and the miners bottom. The other one I showed was this DPMLF, Dundee Precious Metals, another one that's holding up. It is up for the week, 0.7%. And here's the daily. All right. Okay, let's move on to the trade ideas. So, driver 74, NVIDIA. Remember, NVIDIA is the atlas of the markets, holding up the markets on its shoulder. So, it's working on this fifth wave move. We were right with that last pullback being a wave 4. Driver 75, ESEA was a short idea of ours back in early February from that rising wedge. Hope you took profits at the demand zone, guys. That was the area to take profits or go long. Got a nice pop from there. Driver 76, ABUS, Airbus, was a beautiful move out of the coil. Still looks okay. If you're still long, you can probably put a right tight stop there around 285. Driver 77, TransUnion. Remember, ascending triangle from a couple weeks ago, broke out, pulled back, higher low. I added to my long there, and I moved my stop to that higher low. My initial stop was down here. So I like to use the higher lows for the stops. Driver 78, CIB, broke out last week, pulling back. Now we'll see if it finds support at this horizontal area. Hope you took some initial profits, though, on that move. That's always my style. We'll see if it holds that area. Driver 79, CELH, another beauty. Nice long after the break in that trend line. Driver 80, Dollar General. Been showing this for a while. Broke out of the coil. Stalled at the 200-day moving average, but I said to watch it at a higher low here now. Nice pop today. You can put a stop right there at that higher low. My target is this supply zone up here and this open gap. Driver 81, TSBX. Now this has been the star this week, up 36, almost 37% today. This was from last week. What we liked about it was this really nice base. You can see the moving averages were all pinched together. That's when the energy is built up. And look at this phenomenal move. Congrats if you caught it. I know at least a few of you did. Driver 82, EXFY, another one from the list I added on the weekend. Was a nice move yesterday and followed through today. This is my target zone. Been an excellent percentage gain. Yes, it's a low price stock, but that's okay. Driver 83, PDSB. One from Steve last night, a new one. Gave a nice trade today on expanding volume. Driver 84, CYTK, another one from Steve last night. Was a nice tight channel. Triggered today. Where could a stop be? If we want a wide stop at that higher low at 75. Driver 85, DHC, another one from Steve last night. Kind of an inverse head and shoulder look. Triggered today nicely, though off the highs. Driver 86, Victoria's Secret. It's been on the list. I still like it if it can trigger. My target's up in here. Driver 87, PCT. Another one's been on the list since the weekend. Still looks okay. Potential target way up here. Jarbor 88, here's some setups I'm monitoring closely. ES, I actually bought a little bit today early. And there we go. You can see, really like the volume patterns. Really a nice bull flag setting up here. If it can bust out of here, we got to move up to the 200-day moving average and the supply zone. Jarbor 89, CENY. Still little low price stock, still in the same bottoming pattern, one to watch. Jarbor 90, AZUL. This is a nice one. Falling wedge, MACD divergence into a demand zone. Expanding volume. This looks good, guys. I actually bought a little bit of this after hours. Jarbor 91, BW. Here's another one. Nice base forming, low price stock. Nice pickup in volume today. Jarbor 92, AAP, Advanced Auto Parts, tight little channel, nice pickup in volume. Got the 200-day moving average approaching, which matches the trend line. Looks pretty good if it can break that. Jarbor 93, nice break on good volume. This is more of a momentum, so if it can take out today's highs, I think you can get some follow through over 1525. Jarbor 94, here's STRO, another one. Broke out, but could follow through on momentum over today's highs. And the final one, Apple's been in the crapper, but this is a 2-hour chart. If it can break this downtrend line, maybe you got to trade. All right, guys, that'll do it. We'll see what happens tomorrow. Again, thank you for all your support. If you're on YouTube, consider subscribing to us. That really helps us out. Subscribe to the website. We have awesome stuff there that's not available on YouTube. You should really check us out. All right, take care, everyone. Thanks for the support.